All right, traders, a very warm welcome to you all. Firstly, I want to convey my regards to all the Indians watching this video right now because today is the 15th of August and it's the Independence Day of India. So I wish you all congratulations. I hope you have a wonderful day today. Right, so today I'll be discussing about the moving average golden crossover trading setup. This is one trading setup that I expect everyone in the trading world to know. Whether you are an investor, whether you are a trader, this is something that you need to be aware of because this helps you to get those massive returns that you've heard people talk about before. So, if you're starting out your investing journey, this will be very helpful to you. Also, if you are already an established trader looking to enhance the concepts, I feel this will be very helpful to you as well because we'll be starting from basic to the advanced strategies involved in the golden crossover. I'll be discussing three ways that I'm personally using and interpreting the golden crossover to get those returns that I'm talking about. So make sure you watch till the end as I'll be discussing different multi time frame approaches, filtering approaches, etc. Right. So before I get started, make sure you subscribe to our YouTube channel, like this video, and comment on this video because the support that we get from you really motivates us to produce content like this to help you all in your trading journey. So let's get started without further ado. So, what is a golden crossover? Number one, the golden crossover is nothing but a moving average, two moving average overlapping each other. So, in the golden crossover setup, we want a 50 moving average and a 200 moving average. I will be looking at the daily charts because this is most powerful when it happens on the daily time frame. That's why we call it the 50-day moving average and the 200-day moving average. So the 50-day moving average is plotted in the blue color and the 200 moving average is plotted in the red color, and this will stay consistent in all the charts that I'll be discussing. A golden crossover means when the 50 or the short term moving average goes above the long term or the 200-day moving average. So, this point right here is called the golden crossover. What is the beauty about this? Let me give you a little background of what this is. So, if you are a technical analyst, you already know that the 200 period or the day moving average is the most important support or a resistance in your analysis. So, whatever stocks you are trading, whether you are trading a currency pair, index, anything that you trade, the 200 moving average is a long term support or resistance. And 50 at the same time is also a very important number. So if your 50 or the short term number goes above that 200-day resistance, this means things have become really bullish. This can be driven maybe by some fundamental events that are happening in your asset, or maybe something has happened in your stock or whatever asset you are trading. Things have exploded, and this is denoted by the 50 moving average going above that 200 moving average. This is called a golden crossover. So this means things have become extremely bullish, and you can see that prices explode after this golden crossover happens. So this crossover happened at 1867 and prices currently are trading at 2440. So you have a 600 rupee profit per share since the golden crossover. Let me show you one, two more examples of the basic idea of what it is so that we can then get into the advanced strategies involved in the golden crossover. This is the charts of Reliance Industries again on the 1 day time frame. So we had a golden crossover on the 12th of June 2020. A lot of events were happening of Reliance, the AGM, etc. A lot of strategic deals happened, and this really fueled up the rally in Reliance. And when the golden crossover happened at 1368, sorry, the 1500 price level, shares have exploded now, and it's trading currently in less than 3-4 months at 2113, sorry. So you can see a 600 rupee movement per share has happened after the golden crossover has taken place less than 2 months ago. So that is how powerful is the golden crossover. So when the 50 moving average crosses from below to above the 200 long term average, things will get exploded. So you have to get ready and put those stocks in your watch list. At the same time, we have another concept called a death crossover. So, a golden crossover is a bullish crossover, a death crossover is a bearish crossover. This is the charts of Vedanta on the 1 day time frame. So, we can see very well that around 3rd of April 2018, somewhere around that 10th of April, the 50, the short term moving average from above has gone below the 200 long term moving average. This is what I call a death crossover. It's the exact inverse of what we have studied till now, and you can see very well why is this happening. What does this mean? The 50, the short term prices have become very bearish and they have gone below the 200 support that was holding true. You can see very well that the 200 was a great support for Vedanta, and it is in all the asset classes that you will be studying. 200 gives you a really good cushion if you're above the average, and if you are below the average, the 200 will give you a very good resistance. It will not let you come above that price. So when the death crossover has happened, the 50 average goes below the 200 moving average, things become really bearish. And you can see since 2018, the April 2018, things have just been falling from 300. Prices have fallen down all the way to 122 as of today. And you can see here also the 200 average providing a great resistance to your stock. So this is the basic idea of what is the golden crossover and what is the death crossover. So just to recap, golden crossover means things have become really bullish, and the death crossover means that things have become really bearish for your stock. So how do we trade them? That's the idea. So since now we've got the idea of the concept, what is it like? Now how do we trade on it? So the first strategy that I'm talking about is for the beginners or for people who are investors. A lot of you watching this video are investors, they are not active traders. This is one concept that will really help you to invest in good companies. So if you're an investor or if you're a trader who does not monitor his or her portfolio every single day, so you look at your portfolio every week or every 2 weeks or every month, this is something you want to use. The first strategy that I'm talking about is called ride the wave. What does that mean? It's very simple. So whenever you see a golden crossover happening on the charts, just ride the wave. That means that try to get a little bit correction from the price and just buy the stock. Buy the stock, have a big stop loss. Probably I don't have a stop loss when I'm trading a golden crossover if I'm riding the wave for long term. Riding the wave means you buy the stock and forget about it, and you keep invested in the stock till a death crossover happens. So if in the future, if in the next 5 or 6 months a death crossover happens, then we can exit the stock. But currently there is no point to exit from the stock. You can keep on buying on dips, you can keep on adding the stock in your portfolio, but the idea is whenever a golden crossover happens, buy the stock and stay invested in it. I want to tell you a little bit before I go forward about the validity of the golden crossover. A lot of studies have been done on the golden crossover in America and other countries alike, and it has been found out that around 6 to 12 months in the golden crossover. So when the golden crossover happens, 6 to 10 months to 12 months after that, things still are bullish. So you get good positive returns when you are 6 to 12 months into the stock. So if you're an investor, get a golden crossover, buy the stock and keep on adding on dips, because the stock will keep on performing higher and higher. Why am I telling you to wait for some time or wait for a little bit correction? This is because when the golden crossover is happening, things have already become quite extended, and that is the reason why the golden crossover will happen. So if you see very well, at from 1240, prices have gone down to 1800s. So already there's a 600 point move. So what I'm trying to say is, if you want, get the stock at the golden crossover, but a good conservative approach would be try to get some kind of correction or some kind of price action breakout and then try to buy the golden crossover. So you can see the charts of Reliance also, you can see on the the same day in the June 2015, we got a good golden crossover. So when this breakout happens, this would be a very good time to buy Reliance and ride the wave. Stay invested in Reliance till the death crossover happens. Don't panic if you see some kind of corrections in the market. Why? Because this golden crossover essentially is telling us about the market structure of the company. Market structure means, are you in an uptrend, are you in a downtrend, or are you in a sideways trend? So when the golden crossover happens, this means you are in an uptrend. So you have to stay invested. We have to stay with the trend. In technical analysis, we say that the trend is our friend. So if the trend has been established and the trend is up, you need to buy on these dips and keep on investing and keep on adding your position to go forward. And you don't want to do a selling position here, or sell at this point, or sell at this point for aiming this short profit. And why is that? Let me explain a very common psychological issue that we face when the stocks rally a lot. And this is that, when the markets are going up, we should think that buy higher and sell higher. We should go with this psychology. But what we tend to do is, our human psychology makes us make this very common mistake. It's that when the price rises a lot, we start to take a short position on companies, because we question us that, we start questioning the market. That market has made the stock rally a lot, so now things will be very bearish and they'll fall down. But that's not what's going to happen. If things are going up, you'll see a very small pullback and then things will again go up. You'll see a small pullback, things will again go up. So my main request from you guys is that don't question the market. If things are increasing, if the market structure is bullish, try to adopt a buy on rise strategy. Don't go with a short position. Booking profits is fine, but try to buy on. Sorry, I'm sorry about this. Buy on dip. I'm very sorry about that. Buy on dip basically means when the price goes forward and the when the price goes higher, and when there's a dip in the market, try to buy, try to add on these dips. Why? Because things are bullish, market structure is bullish. Again, talking about the Vedanta example of a death crossover. Now, in the death crossover, things have become really bearish. So now, what's the market structure? Ask yourself. The market structure for Vedanta, for any company that's given a death crossover, is bearish. So now, what strategy are we looking? Are we going to make a buying position in the market? No. What we are trying to do is a sell on rise strategy. As simple as that. Sell on rise basically means, when the death crossover happens, try to take advantage of this entire big movement. Try to sell at this point, sell on the rise. Try to again sell on this point at the 200 moving average. Again, when the price goes up to the 200 moving average, try to take a short position here. What you want to do is take advantage of this entire big fall, rather than going and enjoying this small profit or booking this small profit. You don't want to be against the primary trend. The primary trend is down. It's established by the death crossover. So go long, go short for a long time. So if you're investing in cash, you are not allowed in India to hold your short position for a long time. So what you can do is you can hold your put positions, etc. So another example would be on Vedanta. At this point of time, when the golden crossover happens, go long and ride the wave. So I hope the first strategy is clear of riding the wave. Now let's come to the more important strategies involved. So now this is for you short-term traders or the intraday traders out there. This is what I absolutely love about the golden crossover. This is called filtering of the stocks using golden crossover. I have the charts of Colgate Palmolive on the 1 day time frame on the top, and on the bottom I have a 60-minute chart of Colgate Palmolive. So I'm doing a multi time frame approach. So a lot of people ask me, how do I do that? You can just click on this option of selecting the layout, and you can choose whatever layout that you're comfortable with. I have linked the symbols. This means that the same symbol will come on both the screens. At the same time, I have synced crosshair. Crosshair means this cursor and the grid lines that are coming will be synced on both the screens. So let me tell you a little bit about this approach, of how I am using this approach. Filtering stocks mean whether we are buying or selling. So if the golden crossover is happening, so I am getting a golden crossover on the 1 day chart on 2019 September. I've marked this by a vertical line and an arrow as well. So you can see on the 60-minute time frame, this is the golden crossover happening. So now you know very well from the last strategy that when the golden crossover happens, things will become really bullish and you can see things have exploded. So I want to take advantage of that movement. So how do I do that? It's very simple. You do a multi time frame approach and filter the stocks. Filtering of the stocks means that when a golden crossover happens, we know trend is up, so we will only look to buy Colgate Palmolive on intraday basis or on your short term whatever time frame you are trading. Let me explain you with a practical example. So let's open the chart of Colgate Palmolive. I have the 60-minute chart now, and as I said, I have marked this with a vertical line when the golden crossover has happened. So now we are not looking to buy and forget Colgate. Now we are looking for intraday entries or we are looking for short term entries. Short term maybe options or whatever you are trading. So I have a very simple way that I am doing things, and that is with stochastic. You can use RSI, money flow index, CCI, whatever you are comfortable, whatever strategy, price action, anything that you are comfortable with. So now from this point onwards, you know things are bullish, market structure is up. So if daily market structure is up, that means in intraday also I am not selling, ignore selling, and only look for buying. As simple as that. So now when I open the charts of Colgate, I have opened stochastic, the basic settings. Now I am not taking any sell entry, because if I take these sell entries, you can see very well price has gone up. So taking these sell entries was useless. And this is how golden crossover helps me to get more juice out of the indicators. So what entries am I talking about? We can take this buy entry here, because if you remember, now we are following a buy on dip and not a sell on rise approach. So after this point of time, you can buy at this point. We are not going for this short. You can book your profit but not taking a fresh short. You can take this position. This probably would be one stop loss. Any trading setup can will always come with stop loss, but our main goal is to minimize that stop loss. Again, we can take this buy entry on stochastic, great profit. We are not taking this short entry, because if we take this short entry, we are getting stopped out. And with this method, I know very well I am only bullish on the stock, so selling is not in question. Ignore all the sellings and take this buy entry, get this profit. Take this buy entry, get this profit. Take this entry, again you get a great profit. You can take this entry, you can again get a great profit, and finally take this entry and get this profit. So with this approach of filtering of the stocks, what you are doing is identify a golden crossover on a bigger time frame, come down to a shorter time frame, and only trade bullish entries. For example, if you get a death crossover on a daily time frame, for example, we saw in Vedanta, a death crossover has happened. So now, what are we doing? We have established a death crossover on a daily time frame. Now, when we go on a shorter time frame, we are looking for only sell on rise strategy. So then we are not looking to buy, we are only looking to sell. So that's the difference between the two approaches. So main thing is you need to know what the trend is, you need to know what the market structure is, and keep on following that. And finally, the last method is the multi time frame analysis for better timing your entries. This is also very important. This is charts of Infosys now. Again, I've done a multi time frame selecting two panes, the 1 day chart and the 60-minute chart. So if you're starting out trading, the longer the time frame is, the easier the relatively easier entries you will be getting on the charts. Right. So let me discuss about the multi time frame approach. So charts of Infosys, the 50-200 crossover has been plotted on the screen. The blue line is indicating when the golden crossover has happened. So this happened on the 15th December 2017 at this point of time. So now I have marked this on the lower time frame also with a vertical line. So what we'll do is we'll just enlarge that lower time frame screen. So now I have the 60-minute chart and not the 1 day chart. And this is the price level when the golden crossover happened. So better timing your entries means now, if you remember, when will the golden cross happen? The golden cross will happen when things become really extended. So rather than buying something on the top, you have to try to get some kind of discount. This is what I was telling you in the first strategy. Try to get some kind of discount, some kind of pullback or correction, and then buy it. So in this approach, when the golden crossover happened here, I am not looking to buy at this price. Why? Because we can't just blindly buy when the golden cross happens. You are just then putting money in quantitative research. That's all. What we need to do is for example, this is one way I've plotted things. I've drawn a trend line, a support trend line for Infosys. It's being tested quite a lot of time. So rather than buying here, I am looking for a buy entry at this point of time when my trend line is supported. So with this way, if you remember, we are doing nothing but a buy on dip strategy. We are waiting for a dip in the market because things already are extended. It has gone up from 900 to all the way to 1030. So we are waiting for some kind of correction and then taking advantage of that correction to buy on the dip. Otherwise, what you can do is you can adopt some other price action approach or whatever approach you are doing. You can see very well in this chart that there's a very strong resistance at this area of value around the 1040. Also, you can see a very strong support being formed at the 1000 round number. I've already done a video about round numbers in trading. You can check that out. So 1000 is the support, 1040 is the resistance. So if I'm buying, either one option for me is to buy at this price at the 1000 level because I'm getting a double support from the trend line as well as the horizontal support. The other way is you can buy at this price value when there is a range breakout that's taking place, and this will really help you to get your profits. Or you can wait for another rally, another flag, high and tight flag kind of formation, and you can buy at this price. So what I'm trying to say is, rather than just using one time frame to buy, or another, sorry, before I end the meeting, another is we got another big high and tight flag and you can buy at this price. So what I'm trying to say is, just don't invest in a golden crossover just by seeing a golden crossover on the daily chart. What I will recommend is either use this approach to filter stocks for your intraday trades, whether buy or sell, or I would say use a multi time frame analysis to better time your entry. So if you're riding the wave also, try to use a multi time frame analysis, come down a time frame, come down a couple or two time frames, and then try to buy at correction or whatever you are doing. I hope this video has made sense. I've done a very detailed analysis of what golden crossover is, and it's very, very useful in your trading journey, and I've been really getting the juice out of this. So if you like this video, make sure you click on the bell icon, subscribe to our channel, comment what you liked about this in this video, and this really helps us, and we are very happy from the support that we are getting from you guys. And I thank you all for watching, and I'll see you next time.